Hey, folks, welcome back to Money and Politics. It's Tuesday, August the 17th, and I wanted to talk about a couple of different things today. I won't make it real long because I don't think there's a whole lot of news, but I want to put a couple of things in some perspective and share a little bit of news. I don't know if it's major news. I forgot what I just put up there. Did I put up? I think I put up my Twitter. Here's my email. A couple of things. One, we just had the earnings yesterday, and it's amazing to me how some of the comments, a lot of comments are very positive, and I appreciate that. But it's kind of amazing to me how some of the comments are the negative comments that you get, and it's not that someone can't be negative. I can understand that when the stock is down. But the thing is that kind of gets me is it's almost as if the people just don't have any kind of a basic understanding of the idea that Humble is a startup. I mean, no, that sounds incredible, but when you see people saying, how can you justify the current price with the revenues being so low? And it's like, even though I said, number one, it's a brand new startup. Hello, this is the first quarter that we've ever had earnings in the history of the company. It's the second quarter earnings result, but only the first where we've actually had 3 months of any kind of revenue of any kind. Add to that we had the Tickery sales only began in the last 3 weeks of the second quarter. So how much money do you expect a company to make when they're like, 6 months old, as they were in June, the end of the second quarter, and when you only get 3 weeks worth of earnings, accredited to your bottom line because the deal on Tickery didn't close until June the 4th. I mean, to me, this is all rather obvious. I don't know how you get to a point where you're just at a loss of how else to say these things. So what I would say is, while I know, and I fully know, and by the way, let me insert here what someone told me that on StockTwits, people were saying that I'm, in essence, working for Humble, unannounced, and a shill for the company. That is certainly not correct. And folks, let me tell you something. When you're dealing in the markets like this, if I were doing that, if I was working in cahoots with Brian Foote or anyone at Humble, we would both be subject to prosecution and jail time. I ain't going to do that, and I'm sure Brian Foote's not going to do that. So because there's people out there who are naive enough, apparently, to believe different things, I just want you not to be naive, number one, and to understand that you got to just ignore a lot of the ridiculous comments that you hear on some of these boards. And that's one of them. I'm here to be a reporter on information. So when we look at what the earnings were on Humble, that was as I say, the first dot on the chart of where we were on Humble. And just briefly here, we're at 75 cents. We were down, or we closed at 77. We were down at about 75 cents just before the close, and it bounced back. Bounced back, as you can see on this chart, about to where it was for a good part of the day. The high end of the day was 79 cents. We closed at 77 cents. It's like nothing to write home about. This is like kissing your sister. It is what it is. However, it wasn't that long ago. This thing was at about $1.97. And obviously, I think that over a period of time, we're going to be going up. That we just had earnings. We know that. We got Tickery. We got Monster. There were some other things I alluded to. You should watch yesterday's video where I went over some of the second quarter earnings. Second quarter earnings are one dot on a graph. We're going to get the third quarter. Then we can draw a line. Then we're going to get the fourth quarter, and we can extend the line. And then we can see with at least 3 quarters, is the line going progressively up? Is it up and down? Just what is it doing? We're going to know when we get further down the road, how are the ticker resales going? How are we, where do we stand on the development of the peer-to-peer? Where are we on NFTs? Where are we on ETXs? I was looking at the ETXs. I'm just looking over here. I don't have it up anymore. What you see if you want to look at the ETXs on the returns is that on most of, there's like 9 blocks up there. On most of them, they're down for a 1 month and 3 month period. I'm going from memory here, but they're up in 6 month and a year. And some of these are up very much, like 500-something% in a year. However, I'm just saying, I think it's still a little complex as far as that process. Hopefully that gets worked out. But the future, you're going to have to wait to see, is the company growing revenues or is it not? That's when you can start looking and saying, you know, with some analytical ability, is the company growing the way you want? You don't know if it's growing the way they want now or not because you got one dot on a chart with the second quarter earnings. And again, the fact that I have to explain this to some people is confounding because to me, this is just like duh, you know. If we get down the road, if we get to, you know, the second quarter of next year and, you know, their sales aren't growing, well, then it will have been a disaster, okay? But if we get to the second quarter of next year, how much are they going to be doing in ticket sales? Where are we on the peer-to-peer? Where are we on the ETXs? Where are we on the NFTs? That's why you hold the stock now. And at 77 cents, you know, how much shares? It's 23 cents to go to $1. So from here, if it goes up to $1, you're going to have 23-cent gain on a 77 stock. That's what, off the top of my head, in the neighborhood of a 40% return. I mean, it's like, gee, if it, unless the company were to go bankrupt, you're going to at least make some decent money at this price, is what I would say. Now, you have to decide if you have money, and at a certain point, I would say only put so much of your portfolio in any one stock, right? I don't think you should just keep putting money ad nauseum into any one position. When I had, as I've talked so much about Cisco, but it's Cisco or AOL or anything that I was making money on back in the 90s, I still spread my chips around the table. Someone texted me today to say they thought I did a great job on yesterday's video, but I'm sharing this because here's also what they said in a private note. I'm not going to identify him, but he said, personally, I met my ideal number of shares today after taking advantage of this anticipated dip. In fact, Thomas said to me today, we'll probably be down tomorrow because so many people are going to be complaining about how they didn't have enough revenues, because there's going to be that element of the humble shareholders that, you know, are new shareholders and they still don't quite, you know, have a feel for the market and don't have quite a enough calluses, so to speak, as investors. So my friend says, I met my I met my ideal number of shares today after taking advantage of the anticipated dip. I don't see the price staying here long. They have a couple of catalysts coming soon. And I think that's right. Folks, what I would say is, sorry, I was getting a phone call coming in. So that's two of the things I wanted to say. Now, the other thing is, there is some press releases came out today. Humble welcomes Brad Hoagland as a director. This is on the Yahoo Finance page for Humble. And it says Brad holds a position of Chief Financial Officer and Secretary of EchoArc, I'm not sure if I'm saying that right, Holdings. His past experience includes being the managing member at Trend Discovery Capital Management, LLC, senior financial analyst at U.S. Silica Capital, and senior associate at Prudential Financial. So you can read the rest of that. That's on Mr. Hoagland. And they also announced that they're welcoming Robert Cornish as a senior advisor. And again, Mr. Hoagland is a director. So they got Mr. Cornish here as a senior technical advisor. And as it says here, Rob's most recently served as Chief Technology Officer of Gemini, where he was broadly responsible for all aspects of technology, including technology vision, roadmap, delivery, and operations across the organization. While at Gemini, he helped build and support the Global Digital Asset Exchange, NFT marketplace. Well, isn't that interesting? And Gemini Custody, as well as launch Gemini Dollar, stablecoin, Gemini Mobile, Active Trader trading application, Gemini Clearing, Gemini Pay, and Gemini Earn products. All of that is very interesting, and I think apropos to exactly where we want Humble to be going. Now, with the qualifications that you can read, go to Yahoo Finance, put in Humble's HMBL, and you'll get these profiles, these press releases. These people are experienced people. They are not going to go and be a director or be a senior technology advisor to a company that is a fly-by-night. So the fact that they're joining speaks again to the fact that they think there is a future. I'm saying this because I hope you believe what I'm saying, but, you know, I tell, like Ronald Reagan used to say, trust but verify. You don't want to go by just what any one person says. So this is happening today. These people are joining Humble. They see a future. I see a future. I look at the price. It's 77 cents. I don't think it's going to stay here. I have one of the people from Humble Nation writing me, and as he said, buying shares on an anticipated dip. I think that's if you can afford it, a smart way to go. You can build up some shares. Where is this going to go in the future is somewhat anyone's guess. But if we can build this, and as I talked yesterday many times, we're going to get the peer-to-peer. They got to work through the regulatory aspect. We're going to have all the other chains, business lines going, as well as who knows what else. Who knows what else celebrity will go to bat for Humble? Who knows what other deal we're going to close on in the future? Is it going to be a ticket company? Is it going to be something else? I don't know. I know I can't predict the future, but I can look at the present. I can say what is a reasonable risk. And I think that while everyone may understandably be saddened if they bought in early in the cycle, as I did, and I'm not happy that that I'm underwater on my investments, but I also have been around this rodeo for a while, and I know that I can make money, not necessarily in 1 month, 2 months, or 6 months, but over 1 year, 2 years, 3, 5 years, or longer. In fact, I was talking to my brother today, and he was talking about an investment that he made 10 years ago, and he had almost largely forgotten it was underwater. And here, 10 years later, he looked back at it and he sold it and made a profit of $600,000. So I'm not telling you got to hold on to Humble before you're going to be in the green. I'm not saying that. I'm just saying that having patience as an investor is a virtue, and that's really one of the primary lessons that you can learn. It's a frustrating lesson because, as I said to someone else, we're talking about a different business deal. And I said, I want to have transactions moving like a paddle wheel on a steamer, clicking around, transaction. You don't do that in the stock market. Right now on Humble, it's sit and wait. That's the strategy right now. But we can see from today's announcements of people joining the firm, from yesterday's announcement of earnings, where we can see that they are growing their sales at Tickery, even in the 2-month period from June 4 to August 9, had $3.5 million in sales. You know, we can see that this humble nation, the humble truck, is starting to pull off. Business lines are starting to begin producing profit. And it's the same thing I've been saying for most of the last 6 months, folks. And why have I been saying wait for the last 6 months? Because so many of you who are relatively new to investing, and I started this for the newbies, you still, a lot of you, I can sense it, and from your comments that you post, a lot of you still think that we're supposed to be making money like real quick. And I say investing is a get rich strategy, but it's not a get rich quick scheme. Okay? Divesting yourself, making money that's aside from your own personal labor is a way to make money, but it's not a get rich quick scheme. Get rich quick scheme. All right? So that's enough for today. We'll obviously keep watching. Hopefully wouldn't it be great if we get some other announcements on the purchase of another ticket company or something? I'm sure Brian Foote, when he gives his investor call at I presume, the end of the month, I'm sure he'll be able to illuminate a lot more than what I've been able to today. But I'll say goodbye for now. Thanks as always for watching. Give me a thumbs up if you will. I always forget to ask about that. I do read your comments. I appreciate the kind words. I appreciate the negativity if you back it up. But I don't appreciate just idle bashing. That doesn't really add to anyone. So for now, folks, see you later. Thanks for calling.